You open the chart, it's 9:03 a.m., New York time. You see a slight move on NAS 100. Your fingers twitch. Your heart picks up just a little. You zoom in. The 5-minute is printing a bullish candle. You click buy. It wasn't in your plan. You didn't even check the higher time frames. But it felt right. Then the market pulls back. You panic and exit for a small loss. And 5 minutes later, it explodes in your direction. You're furious. You re-enter. And this time, it goes the opposite way. You've just experienced what 90% of retail traders go through every single day. The addiction to action. Most traders lose not because they're stupid, not because they don't know how to read a chart, not because they can't recognize a good setup. They lose because they can't sit on their hands. The financial markets are the perfect battlefield to test a human mind. Every candle that prints, every little wiggle, every micro pullback, it whispers to you, take the trade, don't miss out. Let me tell you a story. There was a trader named Michael. He had been learning how to trade for 6 months, watching YouTube videos, practicing on demo. But the second he went live, things changed. He couldn't stop clicking buy or sell. He thought every movement was an opportunity. In 1 week, he placed 76 trades. And guess what? Only 9 were based on actual analysis. The rest, emotion, impulse, boredom, fear of missing out. By the end of that week, his account was down 48%. Michael didn't have a strategy problem. He had a discipline problem. And more importantly, he had no patience. Patience isn't just a nice word in trading. It's the foundation of consistency. Because the best setups, the clean, high probability ones, they take time to form. You don't plant a seed and dig it up every 5 minutes to see if it's growing. You wait, you water, you protect it. Trading is no different. But why is waiting so hard? Because your brain is wired for dopamine. Every time you enter a trade, especially a random one, your brain gets a tiny hit of excitement, like gambling, like scrolling on social media. It feels like progress, even if it's destroying your account. Your mind lies to you. It says, do something. Don't just sit there. But sitting there, waiting, is exactly what pro traders do. Think about snipers. They can sit in one spot for days, waiting for the perfect shot. They don't fire because they want to. They fire because it's right to. That's the trader mindset. Patience like a sniper. Discipline like a monk. Precision like a surgeon. Here's the truth most beginners don't want to hear. If you're trading every day, you're probably doing it wrong. Not every day gives you an A+ setup. Not every chart movement deserves your attention. But if you wait, if you let the market come to you, you'll start stacking clean wins. And those clean wins build confidence, not chaos. So today, I want you to do something powerful. Next time you sit in front of the charts, pause. Ask yourself, is this in my plan? Am I trading a setup or chasing movement? Would I take this trade again tomorrow with the same confidence? If the answer is no, don't trade. Because in trading, the one who waits wins. The market doesn't reward the fastest. It rewards the most patient. You're not here to gamble. You're here to master a craft. And every time you resist a bad trade, you're already winning. But here's something else you may not have realized. Every time you skip a trade that doesn't meet your criteria, you're training your brain. You're rewiring your mind to value quality over quantity. That's what separates impulsive traders from elite ones. The market is like a mirror. It reflects your emotional discipline. If you come in with chaos, the market will give you more of it. But if you come in calm, focused, and patient, it bends in your favor. Michael, the trader who lost 48% in 1 week, eventually learned this the hard way. He took a break, deleted the trading apps from his phone, spent 2 weeks doing nothing but journaling past trades and meditating every morning. And when he returned, he waited. 3 days passed, no trades. Then on the 4th day, his setup came, his A+ entry. Clean structure, news aligned, risk defined. He entered. 1 trade. That 1 trade made back everything he'd lost. Not because it was lucky, but because he waited. Let that sink in. The real profit in trading isn't in how many setups you take. It's in how many bad ones you skip. Let me take you back to a conversation I once had with a veteran trader named Marcus. He had been in the game for over 15 years, made his fortune trading major forex pairs with a simple but deadly accurate strategy. I asked him, "What's the one thing you think most traders lack?" He smiled and said, "Patience, of course, but not just patience with the market, patience with the process." Then he added something I'll never forget. Everyone wants to be rich next week, but they don't realize that slow trading builds fast accounts. Let that sit for a second. Slow trading builds fast accounts. It sounds like a contradiction, but it's the most consistent truth in this business. In today's world, everything is instant. You want food? Tap your phone. You want entertainment? Scroll TikTok. You want validation? Post on Instagram. So when someone enters the Forex world and hears, "Wait for your setup," it goes against everything they've been programmed to believe, because the world is speeding up, but trading rewards those who slow down. Delayed gratification is the ability to resist the temptation of immediate reward in favor of a bigger reward down the line. In trading, this looks like sitting through a session without entering a single trade, watching price come close to your zone, but not quite, and choosing to stay out, seeing others post their wins online and choosing not to FOMO your way into a dumb setup, taking one clean trade a week while your friends are doing 12. Most traders think more trades equals more money, but that's how gamblers think. Professionals know better. They know that one solid, well-planned, high-probability trade is worth more than 10 impulsive ones. Let me tell you about Elena. She was a mother of two, a part-time nurse. She started trading Forex to create extra income, but her time was limited. So instead of trading all day, she committed to one setup, just one. She studied it, back-tested it, memorized how it looked, felt, moved, and when she saw it in live markets, she'd strike. Only then. No revenge trades. No, maybe this will work entries. Just focus and patience. Her friends in trading groups would laugh. "They only take like 2 trades a week," they'd say. But months passed. And while most of them were stuck in cycles of win-loss break-even, Elena was stacking consistent growth because she understood what most people ignore. Your edge only works when you have the discipline to wait for it. This is what delayed gratification looks like in trading. It's not about taking fewer trades just to feel disciplined. It's about valuing your setup so much you don't even want to waste your energy on subpar entries. You protect your capital, you protect your mind, you protect your time, because you know patience isn't passive, it's powerful. Think of this like farming. You don't throw seeds and expect to harvest tomorrow. You prepare the land, plant, water, wait. Then comes the fruit. Every single setup you skip because it's almost good is like not eating unripe fruit. It might look edible, but it will make you sick. Only the ripe setups deserve your bite. Now I know what you might be thinking. But what if I miss out? What if the setup runs without me? What if I wait and never get the perfect entry? Those are all fear-based questions, and fear has no place in a patient mind. Missing one trade means nothing when you're in this game for years. You didn't come here for one trade. You came here for freedom. Delayed gratification in Forex means you may sit for 4 hours and not trade. You may see 3 almost setups and let them go. You may go an entire week without a trade. But the moment your A+ setup appears, you execute with clarity. Not panic, not doubt, just execution. Because that's the difference between a predictable trader and a profitable one. So the next time you feel like you're falling behind, the next time you feel like you have to click buy or sell just to feel in control, stop. Ask yourself this: am I building fast results or just feeding my impatience? Slow down, zoom out, think long term, because in this game, the one who waits wins, and the one who can delay gratification, they're already rich, whether the account shows it or not. And here's the most ironic part. The more patient you become, the less you need to trade. You stop chasing setups, and they start coming to you. You no longer sit in front of the screen hoping for something to happen. You observe, you wait, and when the stars align, You strike like a sniper, not a gambler. Elena didn't become consistent by trading more. She became consistent by becoming more selective, more intentional, more mature. That's what delayed gratification really builds. Emotional maturity. And emotional maturity in trading, that's where the money is. So next time the charts tempt you with noise, be still, because patience isn't a weakness in forex. It's your sharpest weapon. The price is nearing your zone. It's not quite there yet, but it's close. The candlesticks are forming. Kind of okay, not perfect. You tell yourself, maybe this is good enough. You enter, and then, bam, the market reverses, your stop is hit, and you sit there thinking, why didn't I just wait? Sound familiar? That's the pain of settling, the psychological trap of the almost setup. Let's get real. Most traders don't lose money on complete trash trades. They lose it on almost trades, the ones that look just close enough. Not perfect, but maybe. Not clean, but might work. Not in the plan, but sort of fits. And this mindset is exactly what the market feeds on. Here's what's really happening. You've done the work. You've defined your entry model. You've outlined your confirmations. You've promised yourself to wait for A-plus setups. But then, the price comes near your level. One confirmation shows up, but not the second. You start rationalizing. Your brain says, come on, it's close enough. You don't want to miss it. What if it flies without you? And that right there, that's where most traders throw away their edge. Let me tell you a story. There was a trader named Tarek. He was obsessed with precision. His mentor drilled into him, only take the trade when all three confirmations line up. No exceptions. For a while, Tarek followed that rule. His win rate was strong. He was patient, selective, sharp. But then, he had two back-to-back days without trades. Markets were ranging, no clean setups. He got bored, frustrated. He started scrolling Instagram and saw other traders posting wins. Then came Wednesday. A pair he watched was setting up, but it wasn't quite clean. Only two of his three confirmations showed. Price action was messy, but FOMO kicked in. He said, screw it. It's close enough. He entered. It reversed hard. Stopped out. He didn't just lose money that day. He lost confidence. He broke his rule. He started spiraling. This is how it always begins. You stretch your rules just a little, then a little more. Before you know it, your strategy is gone, and you're trading purely off emotion. The market doesn't punish beginners. It punishes the undisciplined. So why do traders settle for almost setups? Because the brain hates uncertainty. It craves resolution. And entering a trade gives a false sense of control. When you're just watching the chart, it feels like you're doing nothing. You feel out of control, useless, bored. So your brain convinces you, let's take action, any action. But in forex, action is expensive. There's something you need to accept if you want to survive in this game. Almost good enough is still bad. Your edge, the thing that gives you consistent results, only works when conditions are exact. If you bend the rules even a little, your edge breaks. And once that happens, you're not trading a system anymore. You're gambling. Here's the antidote. You need to build emotional distance from your setups. You don't chase them. You don't beg for them. You don't force them. You wait. You wait like a predator in tall grass. Silent, sharp, still. You only pounce when all signs align. That's what elite traders do. They don't ask, can I enter here? They ask, does this setup meet every single criterion with no exceptions? If not, they walk away. Let me give you a powerful mindset shift. A missed trade is better than a bad trade. Missing a trade hurts, but it's clean pain. It teaches you to trust your plan. Taking a bad trade? That's dirty pain. It creates regret, emotional instability, and psychological baggage. Clean pain builds discipline. Dirty pain destroys it. Here's a tip for every trader listening. Start rating your setups. Not every opportunity is worth your time. Before entering, ask, does this meet all confirmations? Am I forcing this? Would I take this same trade tomorrow in front of a live audience? If the answer is no, walk away. Remember, walking away isn't weak. It's what the best do. The difference between a pro and an amateur isn't in how many wins they have. It's in how many trades they skip. They skip the almosts. They skip the maybes. They only take the hell yes setups. And that's how they stay consistent. That's how they sleep at night. That's how they grow accounts. You are not here to trade noise. You are here to trade structure, precision, clarity, alignment. And the market always rewards the ones who wait, because the one who waits always gets the better setup. Imagine sitting in front of your charts for 4 hours. You've had your coffee, your zones are marked, your plan is set, but nothing happens. No clean setups, no strong trends, no obvious entries, just sideways chop. You're watching, waiting, refreshing your focus every 5 minutes. But the market isn't ready, and now you're not sure if you are either. This, right here, is the test. This is where most traders fail, because the hardest part of trading isn't pulling the trigger, it's waiting for the moment to pull it. Patience in trading isn't passive, it's a skill, a mental muscle that must be trained like any other. The market doesn't just test your strategy, it tests your character. It asks you, can you sit still when there's chaos on the screen? Can you trust your plan when boredom starts whispering lies? Can you wait when everything in you wants to act? Let me tell you about a trader named Kevin. Kevin was the kind of guy who couldn't sit still. In life, he was always multitasking. At work, he bounced from one task to another. In trading, he mirrored the same pattern. Always in a trade, always hunting, always doing something. He had talent. He understood market structure. His strategy was solid. But every week, same result. Big gains followed by big losses. So I asked him, do you wait for your setups? He said, most of the time. But sometimes I just get tired of waiting. That was the problem. He didn't lack knowledge. He lacked mental endurance. His patience muscle was weak. So what did he do? He went on a no-trade challenge. 1 week, no live trading, just observation. His only task, watch the markets and journal every single urge to trade. What triggered it? What did the setup look like? What was he feeling? By the end of the week, Kevin discovered something shocking. He wasn't reacting to the market. He was reacting to boredom, insecurity, and impatience. That awareness changed everything. Here's the truth. You're not just fighting the market. You're fighting your own psychology, and patience is your shield. But just like going to the gym, it needs training. How to build the patience muscle 1. Practice intentional inactivity. Yes, do nothing. On purpose. Set a rule. I will only take setups that meet 100% of my criteria. Then hold yourself to it, even if that means 0 trades for 2 days. This trains your brain to disconnect action from progress. Trading is a game of selective aggression. The pros sit still until it's time to strike. 2. Log every temptation. Every time you want to enter but it's not a confirmed setup, write it down. Ask, what triggered this urge? Is it based on fear or fact? Would I take this trade in a prop firm challenge? This builds awareness, and awareness is the foundation of discipline. 3. Visualize high-quality setups. Only spend time looking at screenshots or replay mode of your best past trades. Reinforce what a great setup looks and feels like. This rewires your instincts. Don't glorify randomness. Reward excellence in your memory. 4. Use a countdown rule. Next time you see something forming, instead of clicking instantly, count to 30. Let the candle close. Recheck your confirmations. Breathe. You'd be surprised how many bad trades disappear in those 30 seconds. 5. Create a trading schedule with gaps. You don't need to be glued to your screen all day. Set windows. I'll check the charts at 9 a.m., 12 p.m., and 3 p.m. In between, walk away. This keeps your energy clean and sharp. Decision fatigue kills patience. The market isn't going anywhere. It will be there tomorrow. But your capital, that can vanish with one bad decision. Waiting isn't weakness, it's wisdom. Let me repeat that. Waiting isn't weakness, it's wisdom. It takes real strength to do nothing in a world addicted to noise. It takes maturity to skip a trade that doesn't align, even when others are winning. It takes discipline to sit in silence while your mind screams for action. And guess what? Every time you resist the temptation to settle, every time you stay still when the trade isn't perfect, every time you say not yet, you are growing your patience muscle. And a trader with patience, that's a dangerous trader. Trading is not a sprint. It's not even a marathon. It's an endurance event. And the one who can stay calm, centered, and controlled when everything moves fast, that's the one who gets the win. Not because they fought harder, but because they waited better. You tell yourself you'll wait. You've marked your zone. You know what your setup looks like. You even promised no impulsive trades today, but then the market starts moving, fast, spiking up, pulling back, printing candles like it's about to take off. And your heart starts racing. You feel that itch in your fingertips, that pressure in your chest, that voice in your head whispering, if you don't enter now, you'll miss it. So you jump in, and for a moment, it feels good. You're in the game. You've done something. But then the price pulls back hard, stops you out, and now you're emotionally stuck, trying to recover, trying to be right, trying to get back what you just lost. This is the cycle, and it all begins with a trigger. Impatience isn't just a character flaw, it's an emotional response, sparked by deep psychological triggers that most traders never even notice. You're not just reacting to the market. You're reacting to feelings that have been there long before you open MetaTrader or TradingView. Let me tell you about James. James was a smart guy, former engineer, logical thinker. But when he traded, all that logic went out the window. He would do his analysis, mark his levels, wait, then suddenly he'd just click, buy or sell, without any confirmation. It wasn't until we spoke that he realized something powerful. He wasn't trading the chart. He was trading his need to be right. He hated waiting, not because he lacked patience, but because waiting made him feel powerless. And for a man who built his identity around control, that powerlessness triggered anxiety. Trading forced him to confront himself. His impatience was rooted in emotion, not data. Now pause and ask yourself this. What emotional state are you usually in when you enter early? Is it fear, boredom, jealousy because you saw someone else post profits? Or is it deeper, maybe a belief that I'm running out of time or I need to prove I'm good at this? Your trades don't just come from strategy. They come from stories you tell yourself. Let's break down the most common emotional triggers that create impatience. 1. Fear of missing out. FOMO. You see price moving without you. You imagine how much you could have made. So you jump in too late and get punished. Cure. Zoom out. Remember, there's always another trade. FOMO dies when you accept that you don't need this trade. You need the right trade. 2. Need for progress. You feel like doing nothing means wasting time. You equate trading with action, so you act. Cure. Shift your mindset. Doing nothing is doing something if the setup isn't there. Waiting is trading. 3. Self-worth. Tied to results. You feel like a failure if you don't make money today, so you force trades to prove something to yourself. Cure. Detach your identity from outcomes. Your worth is not in your P&L, it's in your process. 4. Envy and comparison. You're scrolling on Instagram or Telegram. Someone else just made $1,000 in 15 minutes. You feel behind? You panic. Cure. Unfollow noise. Protect your mental environment. You're not in competition. You're in control. Here's what you need to remember. Emotions are normal, but emotional decisions are deadly in trading. You can feel the trigger, just don't act on it. Feel the urge, but don't feed it. Professional traders aren't robots. They feel all the same things you do. They just have the emotional awareness to stop, breathe, and wait. Let me tell you a powerful story from the prop trading world. A trader named Louis failed his funded challenge on day 17. He had been crushing it, 9% up in 2 weeks. All he had to do was not lose 5% in the remaining 13 days. But one morning, he got triggered. He had an argument with his girlfriend, felt emotionally off, but instead of walking away from the charts, he forced trades to feel in control again. He entered 3 setups within 45 minutes, all of them emotionally driven, all of them losers. His account hit the drawdown limit. Game over. Not because he didn't know how to trade, but because he didn't know how to pause. That's what emotional triggers do. They hijack your logic. They sabotage your patience. They take you out of sync with your plan. And worst of all, they create chains of bad decisions. One triggered entry leads to a revenge trade. That leads to over-leveraging, then doubling down, then self-doubt, then silence. All because you didn't take 5 seconds to breathe. So here's your tool. The 5-second rule. Before every trade, count backwards. 5, 4, 3, 2, 1. Ask yourself, am I calm? Is this in my plan, or am I just reacting? If you're triggered, walk away. Take a break. Go for a walk. Reset your nervous system. Patience isn't just mental. It's emotional regulation. The better you manage your emotional triggers, the longer you stay in the game, the more consistent you become, the less you trade from desperation, and the more from precision. There's a moment every trader remembers. It doesn't come from a massive profit or a flashy win. It comes from that one trade, the one where you waited. You didn't chase. You didn't flinch. You sat. You watched. You trusted. And when the setup finally arrived, you took it. Clean entry, clear target. It played out exactly like you envisioned. Not because you got lucky, but because you were patient. That's when it clicks. I don't need to trade more. I need to trust more. That moment is a turning point. It's where confidence begins to compound. You see, most traders think compounding only applies to money. But real growth, it starts with compounding confidence. And confidence doesn't come from wins alone. It comes from self-trust, from sticking to your rules, from knowing that you can wait and still win. Every time you hold back from a low-quality setup, every time you skip a trade that's 70% but not 100%, you reinforce one powerful truth: I am in control. And when you truly believe that, that's when everything changes. Let me introduce you to Clara. Clara wasn't a flashy trader. She didn't post charts every day. She didn't talk much in her signal group. But she had one habit that made her unstoppable. She only took 2 to 3 trades per week. That's it. She had one setup, one model, and she waited. Sometimes for days. People laughed. Forex is about catching moves. You're too slow. But month after month, Clara was quietly compounding. Not just her account, her mindset. While others were chasing entries, Clara was growing certainty. And when her setup came, she executed with conviction. No hesitation, no panic. And that's why she won. The difference between noise and mastery is this. Noise is frantic. Mastery is focused. Noise is reactive. Mastery is patient. And the traders who master patience aren't just profitable, they're unshakable. Why patience builds unbreakable confidence? Because patience gives you space. Space to think clearly, space to stay grounded, space to observe without pressure. When you're patient, you're not emotionally entangled with every candle. You stop needing the market to validate you. You stop forcing progress. You start allowing the trade to come to you. That shift from force to flow is where confidence is born. Let's talk about the psychological loop of impatience versus patience. Impatience loop. Enter early, trade fails. Doubt increases, more emotional entries, more losses. Confidence erodes. Patience loop. Wait for ideal setup. High-quality trade wins or break-evens. Self-trust strengthens, fewer emotional decisions. More consistency. Confidence grows. Which loop are you in? Because one leads to burnout. The other leads to freedom. Here's what they don't teach you in trading courses. You can master technicals. You can backtest for months. You can buy all the prop firm challenges in the world. But if you can't sit still when it matters most, you'll lose. Because in trading, your real capital isn't just money, it's discipline. And patience is the vault that protects it. Let me give you one last story. During a live-funded challenge, a trader named Jalen had only one trade left to pass his final phase. He was at 9%. He only needed 1% more to get funded. The pressure was real. He stared at the charts all day. He saw a couple of decent setups. Most people would have taken them, but he didn't. He waited. On day 27, the perfect setup appeared. Price aligned with structure, news was favorable, momentum was clear. He took the trade. Plus 1.4%, passed. He didn't win because he was a genius. He won because he trusted time. He let the setup mature. He didn't let desperation override discipline. That's what this whole game is about. Not speed, not emotion, not randomness, but trust. Trust in your edge. Trust in your plan. Trust in the process. Trust in yourself. And when you build that kind of trust through patience, confidence becomes automatic. So if you've been doubting yourself lately, if you've been taking too many trades, chasing every wiggle, forcing entries, pause, zoom out. Remember this. The market isn't going anywhere, but your mindset might be if you keep rushing. Choose patience. Let it compound. Let it transform you. Because in the end, the wait is worth it. Not just for the pips, but for the person you become through the process. Thank you for joining me in this journey. This was Patience Pays, the psychology behind waiting for the right setup. Now go out there, not to hunt trades, but to wait for the one worth taking.